discussed the movement of the market, how market move, and what's the expected area, and how market change this direction. When market change this direction, what symptoms, what volume condition we see in the market. So, and I will give today some volume signal also, not more, one or two volume signal also. So first of all, we have to know about some terms. So suppose it's a support level. Okay, support level is this one. And we see in the market that previously it was a downtrend market, and market start from here. Okay, market start from here, falling down, pull back, again fall down, pull back, fall down. After pull back, again market fall down. Okay, so when market here, we know that when we get this type of trendy market, downtrend market, after several waves, market may uh, change its direction. So our expected point is, we can expect that when market came here at this buyer's entry point level, more possibility that market may make a ranging type situation. Okay, so suppose market created one, two, three, four waves in a row, and after creating first, second, third wave, market started to falling down and it showing us weakness like this type of candlestick. This type of candlestick, after that market directly fall down like this. It's a exhaustion type candlestick. So when market create this type of situation, it may happen in a ranging type situation also. After range, when market came to any level, it may make a range here. So when market fall down, 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 and it came to any buyer's entry point area, market trying to make a range here, and in this range we have to search, is there any pattern, market is creating any pattern or not. So definitely we have to search the chart pattern. So because we can trust this type of chart pattern, because we know that after this type of chart pattern, market may change its direction for a long time. So when market move like this way, so it may create a double bottom pattern, triple bottom pattern, inverted head and shoulder pattern, like any types of chart pattern we already learned in price action. So when market in a support level and it trying to make this type of range, so sometimes what happen, breakout may happen to the downward direction after range, like this type of situation, this one, and ranging type situation, but breakout happen like this type of, after that market may create a retracement candle or retest this level and again fall down. So it may happen in the market. So that time we can expect market fall more down, not reverse from here. So how we know that? When market directly fall down, market may break, more possibility that market may break this lower level and fall down more, or market may break the upper level, it create any chart pattern. After creating any chart pattern, it break the neckline and it goes up, and we will get this type of 1 2 3 4, like this type of several waves to the same direction. That means after changing its direction, we will get uptrend situation, and we will get this type of 3 or 4 waves to the upper direction. How we can know? This is the main question here, and this is the main point here. So we can when market move in this area, for each and every candlestick, market, if we add volume bar, market create this type of volume bar for each and every candlestick. For red color candle, we get this type of volume bar. Green color candle, this type of volume bar. This one, this one, this one, this one, this, okay, this, and this. Okay, so when market, just try to understand from the first point, from here. So market start from here, downtrend start from here, because it's a strong sellers entry point level. Sellers enter in the market very strongly. That's why we get this type of a downtrend situation from here. It's a momentum, and it's the first wave, second wave, third wave, fourth wave, impulsive waves to the downward direction. It's a corrective wave, corrective, corrective. So when market create several waves to the same direction, and market came to any strong buyer's entry point area, and after weakness by the seller side, when market came to this buyer's area, and from this area buyers entered in the market like this, goes up, 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 and market trying to make a range. Most of the time it happened. And when market trying to make a range, that time definitely we have to search market is creating any pattern or not. Which pattern? Chart pattern, because we know after chart pattern market changes direction for a long time, like 2 or 3 waves market may create to the same direction. So although market create this type of range, it may break to the lower direction also. So we can easily understand by volume analysis what will happen, what the expected movement, what the possibility. Break the upper level and goes up, it create this type of trendy market to the upper direction, or market break the lower level and fall more down. So when market create this type of range, and below here this type of volume bar, we have to analyze all this volume bar with the spread, because this is a volume spread analysis. That means this type of candlestick body and this type of volume bar. So when we see this candle volume is this one, next can this one, this candle volume is this one. So if we analyze these two candlesticks, this is a strong candle, volume low. This is a weak candle than this one, volume strong. So market, most of the bullish candles volume high here. That means market accumulate from here. It's the accumulation area. So what is accumulation? Accumulation is the same term as it's called accumulation, it's called support, it's called buyer's entry point level, it's called bullish momentum starting point level, it's called the demand area, it's called the demand zone. All the terms are same terms. So when market came create this type of situation and volume, buyers candles volume high, more possibility that market break the upper level and market goes up. So now it's a clear double bottom pattern. It's a neckline breakout happened within 3 candlestick, and after breakout, now we can expect that next movement of the market to the upward direction, because volume is suggesting us yes, demand already high here than the supply. That's why market may goes up. Market may, we can expect a reversal. There are several confirmation here. The first confirmation, if we start from here, it's a first wave, second wave, third wave, fourth wave. Market already created four wave to the same direction. And when market at the last stage, it's weak by the seller side, exhaustion type candlestick, and after that market came to this buyer's entry point. Everything is confirming us, every point. So now when market create this type of situation, it's a strong buyer's entry point level, extreme level. So buyers candles volume high, then the sellers candles volume. So and we get a chart pattern here. And when breakout neckline breakout happen, now we can expect that market may retest this level and goes up, or market may retracement candle here. After that market goes up and it create several waves. More possibility. Everything is suggesting us, everything is confirming us each and every situation. So now the next movement of the market to the upper direction, like this type of. So what happened when market changes direction from here like this? This is called the accumulation area. Accumulation. So accumulation, same terms, it's called support, it's called buyer's entry point level, it's called extreme buyer's level, it's called bullish momentum starting point level, it's called demand area, it's called demand zone, it's called demand starting point. So everything is same terms. So when market changes direction after creating this type of chart pattern and going to the upward direction, sometimes what happens, sometimes we see market after going to the upward direction little bit, or like 4 or 5 candlestick in a row, after that we get like this type of ranging type situation. Sometimes it happen, market may create this type of ranging situation here, like this type of situation market may create. Sometimes it happen. Okay, like this is a ranging type situation. And if we see when market was downtrend and exactly at this area, there is another range here. When market falling down, market was there was range here. So more possibility that market may create another ranging type situation here also. So when market create this type of ranging type situation, we have to again analyze this area. Which volume high here? Which kind of volume? Sellers or buyers? So if we see this sellers candles volume like this one, this one, bullish candles volume, this one. So more possibility that market may break to the upper direction again and goes up. It will give us another uh, trend from here, because it's an early stage of the market. After this range, market may break the upper level like this and market goes up. More possibility this type of situation happen. Okay, so when market create this type of situation, ranging situation here, so it will give us uptrend situation again. So now this area is called reaccumulation. Market first time accumulate from here, and here the buyers candles volume high here, then the sellers candles volume. So market when create this type of situation, more possibility that market goes more up. So that time we can call this area is a reaccumulation. All the terms are volume terms. reaccumulation. Okay, so this is reaccumulation. So we call this is downtrend in a volume term. This is the markdown. Okay, when it's reaccumulation, more possibility that market break the upper level and goes more up. So what happened? Sometimes it may happen that market create this type of situation that sellers candles volume high and there is extreme sellers entry point level also. So that time what happened? We expect the next movement of the market to the downward direction, but it's a early stage of the market. Market may break the upper level and goes up, but when market creates several waves like first wave, second wave, third wave, fourth wave, and market is here. So that time, although we get like I'm drawing, then it will more clear. Okay. So when market reaccumulation we see, that means breakout happened to the upper direction. That time it's a reaccumulation. So market is going to the upward direction. So after sometimes we may get again another pullback, like two or three candlestick market may create, like this type of candlestick market may create here, and after that market again goes up. So when market again goes up like this, so it already created several waves to the same direction. So when market give us weakness sign by the buyer side, more possibility that we have to search where is our extreme resistance level. Is there any extreme resistance level or not? If we see there is extreme resistance level or seller's entry point level here, so market may more possibility that market may create another ranging situation here also. So when market came here, it may create this type of ranging type situation here. Goes up. So now if we see the seller's candles volume high than the buyer's candles volume, and if we get confirmation, that means any chart pattern here, so more possibility that market may change its direction from here also again, because every situation is suggesting us this is the time that market may change this direction from here, because market already creates several waves and buyers are weak here. Now it's a strong sellers entry point area. Market create a chart pattern here and the volume condition is high here, so volume are very high here. So sellers candles volume high here than the buyers candles volume. So that time more possibility that market may create here another ranging type situation. Another, by this range market may create this type of double top pattern or low high lower high lower high, this type of situation market may create, and breakout happen to the downward direction and market fall down. So when market create this type of situation, so now this is called the distribution area. Market distribute from here, so we can call this term as distribution. Okay, so this term is distribution. But sometimes we see a little bit different situation. So what happened? Although we get this type of sellers candlestick and sellers candles volume higher than the buyers candles, market fall down little bit like this drawing, little bit like here or here. After that, market may again started to going up like this. Finally break this level also sometimes and market goes up. So there are some reason here. This is called the false trend. This trend is called the false trend. Market may create this type of false trend also. So when market create this type of, most of the time market follow our rules. That's why we must follow our rules, because when volume high, our expectation to the downward direction, market changes direction to the market changes direction. Previously uptrend, it will downtrend, but sometimes it may happen. So there are some strong reason. I will explain this situation in the chart. So when we get this type of situation, market may create this type of false trend and it go up little bit. After that, market may create another pattern or another range. Finally, market fall down. So there are some reason I will explain. Okay. So if we see it's a normal situation, that means market changed its direction from this seller's entry point area, and seller's candles volume high, then the buyer's candles volume. So when market changes its direction from here, so that time we expect that market creates several waves to the same direction, like this type of. Previously, it happened to the upward direction. Market now fall down, and we can expect this type of downtrend situation here again. So when market create this type of situation, it's a distribution. So market may create another ranging type situation after sometimes like this. In this situation, if we see the seller's candles volume high, then the buyer's candles volume, that time more possibility that breakout happen to the downward direction and market fall more down like this, because everything is suggesting us already market changes direction from here, and it was fast movement of the market, that means fast impulsive waves, and it's early stage of the market. So breakout happened to the downward direction and market will continue more to the downward direction like this. So now this area, if this type of situation happen, now this area is called the redistribution. Okay. So the terms redistribution. Okay. So this area is redistribution area. So market fall more down, and it may create this type of pullback here to here. Okay. Here to here. It's a pullback. After this pullback, market may again fall down like this. Okay. So it may create one more wave like this. After one or two candlestick, market again fall down. So when we see this type of situation, again weakness, and after weakness, market came to this level. It not mandatory that market again came back to the same level. No, it may goes up from here also, because previously we see this is a ranging type situation, and if we see several times market goes up from this area, from this level, when market create one, two, or three wave, and market came to this area, and if we get this type of ranging type situation again here, and volume high here by the buyer side, like this type of same situation here, that time it will our accumulation area, market again goes up from here also, not fall more down. So when suppose market create a range here, it was a distribution area, that means it was a strong sellers entry point area, extreme sellers level, but volume of the bullish candles high, then the bearish candles volume, and breakout happened to the upper direction. And after pullback or after retracement, after pullback like this type of pullback, market again goes up. So that time it's not our distribution area. It will again reaccumulation here. Accumulation here, breakout happened to the upper direction, volume high, bullish candles volume high, reaccumulation. Again, if we see same situation here for the second time, this type of situation here, so that time it's a reaccumulation area. We can again go with the buyers more up. But when market create this type of situation that sellers candles volume high, then the buyers candles volume, so more possibility breakout happen to the downward direction and it will create this type of some ranging situation, trendy situation like previous condition to the downward direction. So when again range and sellers candles volume high, then the buyers candles volume, more possibility that breakout happen to the downward direction and it will go more down. That time it's a distribution, it's a redistribution. If we see again here this type of situation and ranging type situation, bearish candles volume high, market fall down, breakout happen to the downward direction, that time it will our again redistribution again. But if we see this type of ranging situation here also and bullish candles volume high than the bearish candles volume, that time it's not redistribution, it's accumulation. Market break the upper level and goes up, and we must search at this area, is there any pattern or not, market create any chart pattern or not. If we see, market already created a chart pattern here and it's a ranging type situation here, so breakout happened to the upper direction, so everything is okay like this here, same situation here, that time it's an accumulation, we can go with the buyers confidently. So we must place our trade by our signal candle. Okay, so I think it's clear. So when market going to the upward direction, we have to call this one not uptrend, it's markup. Markup. Okay. This is this called markup. So now what's our expected area? How we can place our trade? By volume analysis, by volume signal. Today I will give two signal, one signal for uptrend and one signal for downtrend. Not one signal, basically two signals for uptrend and two signals for downtrend. Okay, so by this way market run to the upward direction and to the downward direction. Most of the time it's happened, and I am talking about a strong trendy market, not a ranging market. This is not a ranging market strategy, this is not a ranging market psychology, it's only trendy market, a strong trendy market. And how we can recognize this type of trendy market? If we if market create this type of trendy situation on the left side, after, if everything is okay, it's a strong seller's entry point level, volume is giving us information, it's a distribution area, and market sellers candles volume high, and already market create a chart pattern here. After that market started to falling down, breakout happened, neckline breakout happened, and market started to falling down to the downward direction. So everything will suggesting us, yes, now we can get this type of trendy situation on the right side also. By this way we have to analyze the market and we have to place our trade. So in an uptrend market, now try to understand, if we observe here to here, so in our chart we always see this type of situation. When market is strongly uptrend, definitely market create a very weak candlestick by the seller side, bearish candle, we will get weak candlestick by the seller side. So, and market when strongly downtrend, we will get very weak candlestick by the buyer side. So it may happen. So when market create this type of situation, definitely we have to go with the buyers if market uptrend market. Okay, just 1 minute. Okay. So when market strong uptrend, we have to we have to take signal from the sellers because sellers are weak, and we have to place our trade to the upward direction by taking signal from the sellers. So in a strong downtrend market, we have to go with the sellers and we must take signal from the buyers. When buyers are very weak, then sellers again continue the market to the downward direction. From where we have to place our trade? This is another question. This is also an important question. So we see so many levels in the market, and I already explained in price action there are some hidden levels also. So we have to just follow that level, and very perfect levels are if we get any previous level, that from this level buyers entered in the market previously. It was previous history of the market, not more previous, just little bit above. Market goes up from this level. So market create after breakout, market create this type of this one and this one, this two candlestick. So we have to take signal. There are some signal candles I will explain. So by this signal, and we have to place our trade below the level to the upward direction, below that level, that support level. So support level, this is the demand area. This is called demand area. Demand start from here. Demand start from a support level and supply start from a resistance level. If we see there is this one resistance level. So now I'm explaining about signal candle. Okay. Our first signal from the uptrend market is a red hammer candle. We get this type of this one hammer or this one. Two types of hammer candle we see in the market when market strongly uptrend. So now this is our signal candle. So what will our volume condition? Our volume condition must high than previous two candlestick volume. That means, or must low than minimum previous two candlestick volume. So when we see this one, this is a hammer candle. This candle, suppose this one our hammer candle. So I'm drawing first here. Okay. So this candle's volume must high like this, volume this one, and any of this candlestick volume this one. So if we see this candlestick, these two types of candlestick and volume high, this is called the downtrend signal in an uptrend market. Downtrend signal in the uptrend market. And when we see this candle's volume is low than previous two candlestick bar, then it's a pseudo signal, pseudo downtrend signal. Pseudo downtrend signal. Downtrend and pseudo downtrend. So when this candle's volume high, then it's an uptrend signal, a downtrend signal in uptrend market. And when this candle's volume is low, then minimum previous two candlestick bar, then it's our pseudo downtrend signal. And in a up downtrend market, we have to take signal from the buyers, and our first signal is inverted hammer candle. Bullish inverted hammer candle. We will get this type of two bullish inverted hammer in the market. So this one our first signal. Okay. So when volume is high, then previous two candlestick bar, then it's a uptrend signal. And when volume is low, then minimum previous two candlestick bar, then it's a pseudo signal. This one and this one. Candle is this one, any of this candlestick. So uptrust, pseudo uptrust. Pseudo uptrust signal. So now when a market is strongly uptrend, first of all, we have to see the signal candle. Is there any hammer candlestick or this type of hammer candlestick or not? So this is our hammer candle. It's okay. We get signal candle. This is first task is this one, that we have to recognize the signal candle. This one our signal candle. It's okay. Second task is, now we have to observe the volume condition. If this candle volume is this one, okay, okay, so these two candlestick volume, drawing here, this one and this one, and this candlestick hammer candlestick volume is high than previous two candlestick bar. Now it's our signal. So this one our signal now, signal candle. So after this candle and after this signal, we don't place our trade immediately from here to the upward direction. No, because we know that demand start from a support level. So we have to wait till market hit any support level. So this one our signal candle, our support is here. There is a gap here to here, and I am explaining all candles are 3-minute signal candle. After this type of signal, we have to place our trade to the upward direction for 3 minutes. So when market create this one, we have 1 minute signal also, and we have 5-minute signal also. Each and every strategy I will share step by step. So first of all, we get our first candle, this one our signal candle, and volume is messing. So now we have to wait till market hit this level. When market hit this level, we can place our trade immediately to the upward direction, same direction, for 3 minutes. But if we place our trade immediately from here to the upward direction for 3 minutes, market may create 3 weak candlestick to fill up this gap. After that, market may goes up. That time we must lose our trade. So this is a strategy. For uptrend, same situation here also. Suppose it's a inverted hammer candle and volume matching. It's this candle volume is high or this candle volume is low than previous two candlestick bar. So then it's our signal. Now we have to wait for resistance level. If our resistance level is here, when next candle hit this resistance level, then we can place our trade from here to the downward direction for 3 minutes. So This is two candlestick. Today I will give more signal in our next session. So after signal in the downtrend market, or pseudo after signal in the downtrend market, and downtrend signal in the uptrend market. So now I'm going to the chart. If you have any question, you can ask me.
Sir, my question is a little different. I'm just hello. Can you hear
Yes,
me?
yes, yes. Tell me.
Hello,
Yes, tell me.
sir. I also okay. Sir, I also work in Olem Trade. I think you know Olem Trade platform.
Yes.
There is some currency like European index, the Asian composite index, like this. So this all working the working in that also, or there is a different strategy for that kind of currency.
Okay. So volume, uh, all currency you can apply all this strategy in all currency, but you must place your trade by volume signal, by volume bar. If Olim trade
Okay.
have volume option, then you have to add that volume option in your platform. Then you can place your trade by following this strategy. Okay, but that
Okay, okay.
platform
But
must have
there is a no
volume.
volume bar. In,
Okay, so there is
okay,
no
okay, sir.
there is
I,
yes, there, if there is no volume bar, so how you apply this strategy? It's not possible.
yes, 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 sir.
Okay, can you see my screen now? GBP USD pair.
Yes, yes.
Okay, so see here. So it's looking like a ranging type market previously, and finally, see here, if we analyze from here, this is a weak candlestick than this one, volume low here, this candle is strong candle, volume high here. So this candlestick volume high here little bit than previous one, but candlestick is very low here. That means weak spread candle. That means this weak candle, but volume high. Again, this candle is a strong candle than this one, but volume low. So again, this candle's volume high, but this candlestick, this one is weak than this one, this candlestick. So if we analyze here to here, everything is clear now. Then sellers are weak, buyers are strong here by the volume side. And now, if we observe, so previously it was uptrend market. Market make a range here. Finally, it little bit came below, near to this round number level. And after came back to this round number level, there is rejection. And after rejection, see here, market trying to make a range here. And after range, it also make a already made a pattern. This is called a head and shoulder pattern, inverted head and shoulder pattern, this one. And volume also suggesting us buyers are powerful now. So then the sellers, this one. So now when market create this type of situation, this is called the accumulation. After accumulation, we expect uptrend situation. So see here, after sometimes market trying to make another range here. So see this candle volume high than previous all others candlestick volume. So this is called reaccumulation, and finally breakout happened to the upper direction, market continue to the same direction. See here. market trying to make a range after several waves to the same direction, and market came. We can check this area also previously. Is there any extreme seller entry point area or not? No market. Yes, there is market here. Previously, several times market reversed from here. Several times. Again and again sellers entered. After that downtrend situation, finally market came here. Okay. Finally market came here. So when finally market came here, if we analyze this area, this candle's volume high than previous all others candlestick volume. So now this candlestick suggesting us more possibility that market break lower level and market fall down. So it happened. Market break the lower level, and after sometimes market create another range here. So now this is called the distribution. Market distribute from here. So this is called the supply area. This is accumulation. This is called the demand area, demand zone. So market create this type of situation, and see here this candlestick volume again high than previous all others candlestick volume. So that means more possibility market break this level and market fall down. So here it's distribution, now it's redistribution. Market again falling down, 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 down. So when market came near to this area, see here, I already explained that market may not came back to the previous level. Market may goes up from here also, because already market create wave, and market again create this type of range. And in this range, see here, this strong candlestick volume also high than previous all this candlestick volume. This candlestick volume high. So when market came to the support level, buyers candles volume high. So again we can expect uptrend situation. Market create this wave, this wave, this wave. See here, again this candle's volume very low and candlestick also low. And previously it's a bearish momentum starting point level, and it's also a extreme level. So market again fall down. And finally market create a ranging situation here. It may happen when market came near to this area, it may make a sideways type situation. Every time we will not get the perfect market condition. So when market came here, it creating low, high, low, high, low, high, low. It's also a chart pattern. And market creating uptrend situation, and it's also a chart pattern. So by this pattern, it's also our confirmation that market may goes more up. So when we see market going to the upward direction, so some bearish candles volume also high here. It doesn't mean that market break the lower level and fall down, because market came to this area again. See, rejection. When market came to this area, it's a buyer's entry point area. From this buyer's entry point area, market may goes up by creating any chart pattern. So when market creating any chart pattern, see here, if we count here to here, so here to here, low, high, low, high, low, high, low. So market continuously making this situation. It's an uptrend market situation, uptrend market condition. And there is also a pattern here also. After this is one pattern, low, high, low, high, low, and this is another pattern market already create, inverted head and shoulder pattern here, and this candle volume high. So now this situation suggesting us, yes, market may goes more up. We can expect that market may goes more up to the same direction. at least to next extreme level, above extreme level. Previous, we have to search the previous history of the market. Where is the extreme level? This one previous extreme level, this one extreme level, this one extreme level. When market came here, see here, it create this candle and this candle volume high. So now this situation suggesting us market will give us downtrend situation from here, because previously each and every time it worked. Previously each and every time it worked. So we started from here, goes up, volume high, sellers candle volume high. We face downtrend situation. Again volume high, accumulation, market goes up. Again volume high, market fall down. So, but when market came here, this candle's volume is high, but it started to falling down. But suddenly market again goes up. So why? What's the reason? There are some strong reason here. All the data comes from the forex market, and there are so many big company and entities there. They also invest. So suppose we are day trader, our investment capital, like for beginners, like 200 USD, 200 USD, maximum 1K. It's our deposited amount. It's our money. But the big company, big bank, insurance, and so many companies, they have like million USD. So we analyze the market perfectly and we think that everything is okay now, market will fall down. But they invest here to the upper direction. That means they buy. They place an order buy option. We place another sell option. So when they think that market is falling down, they are losing their money. So they again invest here. Suppose uh, we are day traders, we invest here, think that 5K here. And when they think that they are losing their money, they again invest here 15K. Just it's an example. So 15K. So that time market again started to going up to the upper direction. So when they came to a break even point, that means no profit, no loss, or little bit profit, they go out from the market. And when they go out from the market, see here, this is the market condition. Market again fall down. But this situation may happen here because this is the signal. We expect this type of situation here. But this is the only reason. That's why this is called the false trend. It not goes more up. That's why sometimes it may happen. Market may create this type of false trend. We can trust this type of false trend. So when they go out from the market, after come to a break even point or little bit profit, then again market fall down. So this is all about today's session, and now I'm going to explain the signal candle. So in an uptrend market, it's definitely uptrend market because market create here a low, high low, high low, high low, and already market create here a this type of inverted head and shoulder pattern, and volume also high, and bullish candles are more than the bearish candles, and bullish candles volume uh, just one or two candles volume, bearish candles volume high, all the bullish candles volume high than the bearish candles volume exactly at this area. So everything is suggesting us it will give us an uptrend situation. So when market create this type of situation, see this area, the second candle, it's a hammer candle or hammer type candle, and third candle also a hammer candle. So two signal in a row we already get here. So we get our first signal. This candle is our signal, was our signal, this one. So after this signal, now we have to search the volume condition. See here, this candle's volume is high than previous minimum two candlestick volume. This one. That's why this is our signal, downtrend signal in an uptrend market. So now this one our signal. So our next task is we have to start. Everything is okay now because we get signal candle first task and second task, a volume condition. Volume condition is also matching. It's also okay. So now our third task is we have to search where is our support point. That means demand start from a support level. That's why we have to search our support level. So now after this signal, we don't immediately place our trade here to the upward direction. No. When market hit this level, we can place our trade here to the upward direction for 3 minutes. 1, 2, 3. We win here based on this signal because it's a downtrend signal in an uptrend market. So again, we get another signal. It's a pseudo signal because volume is low than minimum previous two candlestick bars. So it's also our signal. After this signal, we can also place our trade to the upward direction for 3 minutes. But when one trade running, no need to place another trade here, same area. After finished one trade, then we can place our trade, another trade. So in an uptrend market, it's definitely uptrend. Suppose uh, we are day traders, we invest here, think that 5K here. And when they think that they are losing their money, they again invest here 15K. Just it's an example. So 15K. So that time market again started to going up to the upper direction. So when they came to a break even point, that means no profit, no loss, or little bit profit, they go out from the market. And when they go out from the market, see here, this is the market condition. Market again fall down. But this situation may happen here because this is the signal. We expect this type of situation here. But this is the only reason. That's why this is called the false trend. It not goes more up. That's why sometimes it may happen. Market may create this type of false trend. We can trust this type of false trend. So when they go out from the market, after come to a break even point or little bit profit, then again market fall down. So this is all about today's session, and now I'm going to explain the signal candle. So in an uptrend market, it's definitely uptrend market because market create here a low, high, low, high, low, high, low, and already market create here a this type of inverted head and shoulder pattern, and volume also high, and bullish candles are more than the bearish candles, and bullish candles volume uh, just one or two candles volume, bearish candles volume high, all the bullish candles volume high than the bearish candles volume exactly at this area. So everything is suggesting us it will give us an uptrend situation. So when market create this type of situation, see this area, the second candle, it's a hammer candle or hammer type candle, and third candle also a hammer candle. So two signal in a row we already get here. So we get our first signal. This candle is our signal, was our signal, this one. So after this signal, now we have to search the volume condition. See here, this candle's volume is high than previous minimum two candlestick volume. This one. That's why this is our signal, downtrend signal in an uptrend market. So now this one our signal. So our next task is we have to start. Everything is okay now because we get signal candle first task and second task, a volume condition. Volume condition is also matching. It's also okay. So now our third task is we have to search where is our support point. That means demand start from a support level. That's why we have to search our support level. So now after this signal, we don't immediately place our trade here to the upward direction. No. When market hit this level, we can place our trade here to the upward direction for 3 minutes. 1, 2, 3. We win here based on this signal. Because it's a downtrend signal in an uptrend market. So again, we get another signal. It's a pseudo signal because volume is low than minimum previous two candlestick bars. So it's also our signal. After this signal, we can also place our trade to the upward direction for 3 minutes. But when one trade running, no need to place another trade here, same area. After finished one trade, then we can place or trade another trade. So we know that market may change its direction after creating several waves when market came to any extreme resistance level. So this is also our signal candle, volume high than previous two candlestick bar. But if we place our trade to the upward direction, market fall down and we lose our trade. Why? What's the reason? This signal working here, this signal failed here. What's the filter? The filter is when we already came to a extreme level after after some several waves. That time, although we get any signal candle, we don't have opportunity. Now we have to check which type of area this one. See here, it's the extreme seller entry point level. Seller center, seller center, seller center, again and again. And in this situation, we get this signal candle. How we can place our trade after this signal here to the upward direction? It's not possible because market start from here. It already creates several waves to the same direction. Although we get this one, this signal, we have to avoid this one. This is the only filter here. Okay, so in a downtrend market, is there any signal candle? No, 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 no. This one, inverted hammer candle and volume high. Then previous two candlestick bar, two or three candlestick bar. So now this one our signal. Where is our resistance level? This one our resistance level. Okay, this one. So when after this signal, when market hit this level, we can place our trade to the downward direction for 3 minutes. So 1, 2, 3 or 1, 2, 3 win here. So this is two signal. One signal for uptrend market, one signal for uptrend market, and one signal for downtrend market. So uptrend market bearish hammer candle, two types of bearish hammer candle, and downtrend market two types of inverted hammer candle, bullish inverted hammer candle. So this is all about
ठंडी
today's
वेदर
session.
चलेगा हमें.
So now I'm going to close today's session here. Thanks for joining today's session.